Hi, I'm Nancy Cahalan, President and CEO of Your Better Business Bureau. And today we are presenting our fifth Business Builders webinar of the 2023 season. It's titled Basics of Establishing and Building Business Credit. These Lunch and Learn webinars have been pretty popular. Nice to get some good use of your lunch hour. So first, a few housekeeping tips. As you heard, this webinar is being recorded and all attendees are in listen-only mode. We'll follow up after the presentation. We'll email the recording and a copy of the presentation to all of the attendees. Enter your questions as we go in the chat function, and I see there's also a question function. I'll monitor both of those throughout. If it's a timely matter that refers specifically to the current topic, I'll interrupt and get your answer right away. If not, I'll save it to the end for our question and answer period. So today's presentation is by Sonia Descormiers, Vice President, Financial Wellness Coach and Relationship Manager at Berkshire Bank. That's a lot of hats. Sonia has been in the finance and banking industry for over 2 decades, and she earned her bachelor's degree in business administration and an MBA as well from the University of Montreal. Over the years and through her life experience, Sonia has built a wealth of expertise around financial concepts like financial wellness. Her passion is to help people thrive financially and live their best life. Outside of work, she likes to spend her free time watching her daughter play hockey. That's that Montreal connection, and staying involved in her community, helping others. Sonia's inspirational quote is, "When you have a dream, you gotta grab it and never let go." And without further ado, I'm turning today's presentation over to Sonia.
Thank you very much, Nancy, for the warm introduction. So good afternoon, everyone. First, I wanted to thank, Nancy personally to give me the opportunity to join the Better Business Bureau today and facilitating this webinar around building business credit. This webinar will run about 45 minutes. We will ask that if you have any questions, because it's a small group, that you type your question into the chat, and Nancy will let me know. Please feel free to ask questions. There's never a wrong question. I'm hoping today that you're going to get good information out of this presentation. You also have my contact information. You don't have to back with Berkshire Bank. I know I work at Berkshire Bank, but today I'm doing it more kind of like on the community-wise. Like my bio say, I like to help people thriving. I'm here to help, local business clients to thrive with their business. So without any further, here I'm gonna move this presentation. Nancy, okay, perfect. Can everyone see my screen?
Yes.
Yes. Yes. Okay. Perfect. Okay. So I just want to ask, and feel free to give the answer through the chat, or you can unmute yourself to provide me the answer. Right now I can see we have 6 attendees, so I would like to give the opportunity to who is on the call right now to introduce themselves, their business, and what do they do actually in their business. So you can either type the information in the chat, or you could unmute yourself and introduce yourself. Nancy, can you see any attendees?
Yes, I see. Yep. So wait a minute. They're back. Okay. I'm not getting anything in the chat. Maybe if they put something in here, we can talk about it at the end. Okay.
Yeah, that sounds good to me.
All right.
So what we're going to focus on today, because I wanted to have a feel of who was joining us, how long they've been in business. The presentation today really targets whatever your startup business or you also been in business for quite some time. So I'm going to go over the different components on how to establish credit and what to look for when you want to build credit. Let me go to the next slide. Okay, so believe it or not, like a lot of time when I meet with business clients that have been in business for 2, 3, 4, even 5 years, I had the opportunity to meet with someone over 2 weeks ago. She has been in business for over 3 years, very prospering, doing extremely well, but never really established any credit. And for her, it was like, well, I don't really need credit. I've been paying, my business is thriving. I make good income at the end of the year. And I keep using my own personal resource financially when it comes to expensing, to my project and all of that. But then 3 years later, she has an opportunity to grow a business and she has no credit and a personal financial resource had kind of run out. So again, you could be in business, you're thriving very well. And I always tell people, whatever your startup business, whatever you've been in established business, if you have not yet looked to build credit, it is the best time to think about it. I always advise my client to build credit, establish credit, get lending through your bank when you don't need it. Because we all know when you look to establish credit or get credit to your bank, sometimes your financial might not be where they need to be at, and then you're going to get turned down. So, and that applies also on the personal side. So again, it's always good to establish credit when you don't need it and establish like a business line of credit with your bank when you don't need it. I'm going to move on to the next slide. So, I think business credit can definitely help you prosper and, to the day-to-day like business activities. Why it is important to have business credit? Because like we mentioned here, it can help you on your day-to-day, activities, your expense. Some of you might have 30 days, 60 days accounts receivable, and then there could be a gap into the cash flow. Some of you look to actually grow your business and you need to purchase a larger inventory, but then your financial resources are limited. So that's where, having credit in place, when you don't need it, that will help you kind of keep growing your business, getting access to your resource. We're talking about staff. We all know right now it could be a struggle for a lot of people, hiring the right staff, don't have the financial resource to train them. So if you have in place, again, talking about having business credit, that could allow you to actually hire the qualified people because you're going to be able to pay them more, and then your return is going to pay off because their productivity will increase your revenue. Here. And then, also, I think credit, we're talking about like a business line of credit. Sometimes cash can run very low. And I think business line of credit, while you have credit, can really help you to better operate on the day-to-day basis with your business. I'm going to move on to the next slide. One thing you also want to consider, and this part right here is very important. If you're by yourself into your business, there's not really any worry about, because when you're going to go and look to establish credit or even borrow, some lending with a bank, the bank look at the owner, the guarantor in the business. And anyone that has 20% or more of ownership, partnership, shareholder, or guarantorship into the business will have to be on the application. So one thing you have to be very, very mindful, if some of you are into a partnership or you have more than one owner into the business, how much do you know about the partner financial? How much do you know about their personal financial? Because that will impact. You could literally go to your bank, say we need a business line of credit, and all of a sudden you know your personal finance, your personal credit is really, really good, but you're not aware about what's going on about your partner, the shareholder, or the person that has 20 more percent. And then when we submit the application, all of a sudden come back and be turned down because one of the partner does not qualify, and then the deal is actually not moving forward. So you have to be very mindful. If you are by yourself, that's easy. You know about yourself. But if you do have a partner, a shareholder, or 20% more guarantor into the business, that you are aware about their personal side of credit. Do we have any questions so far? Are we moving kind
No,
of good with the flow? Yeah.
so far, no questions, but I can give you a rough idea, like the types of businesses that have registered for today. We have an auto dealer, a marketing company, let's see, a contractor, property management, and someone in energy conservation. So really a wide variety
Yeah.
of companies.
This is awesome because we're going to go over the type of company as well when it comes to lending. So thank you so much, Nancy, for providing me this information. I took note of it.
Okay.
So one thing, so if some of you are startup business, one thing that banks or lender will look at when you are a startup or even establish a business that hasn't done any business credit, what's going to back you up to get credit? It's your personal. So you started your business, you inject your personal funds, and all of a sudden, you're looking to get, some sort of business loan or things like that. The bank, the lender will look at your personal credit to be able to cash flow and approve the deal. So it is very important to know where you are on the personal side of the credit. One thing that I can say, if you don't know how to look at your personal credit, you don't know your personal credit score, you do have my contact information. I can help you because I will be the beginning of established business credit. So why actually, maintaining a good credit is important. I mean, I think we all know that. It will help you, for your loan eligibility. And obviously the personal credit score will impact the decision for the lender. One thing for existing business. So if some of you here that are joining us have been in business for 2, 3, 4, even more years than that, and you haven't really established any business credit, you do have an advantage on the people that are actually starting up a business because we can actually look at your financial history. We can pull your business history by getting your balance sheet, your P&L, your tax return, and that can help in the instance, getting your loan eligibility approved. One thing that it's very important to know, so when you go to your bank, and maybe you already done so, and you went and applied for a business line of credit or a term loan because you needed to buy a piece of equipment, and then all of a sudden the loan came back being turned down and you don't really understand it, just say, the deal doesn't cash flow, your personal credit is not really good, the revenue are not there. There's one thing that most lender, and I will say 99% of the lender, use to actually determine also with the credit if the deal is going to go through or not. So we call them the 5C of lending. So when we talk about the capacity, so we look at the business and we look to see when you borrow, you're looking to borrow $50,000, kind of like on the personal side, if you're going to be able to repay the debt with the income that you are making in the business. The other one, we also look at the collateral. So if you apply for business line of credit, kind of like on the personal side of things, we don't have anything to go after. We're just using your signature to guarantee that you're going to be faithful and make the payment if you were to borrow against the line of credit. We also look, when we talk about collateral, if you are looking to purchase either a vehicle for the business, a piece of equipment that's going to help you grow the business, that could help solidify the deal because we will have a collateral that we can use in the instance that you are not making your payment. We can go after the asset and recover it. So obviously, banks like to use collateral. We can use business collateral, and we can also look at personal collateral if you do have some available. We look at also the character. The character is who is actually the guarantor, who is actually the person that will be kind of like the signer on the deal. So we look at how are they doing personally, how much do they know about their business, and and how are they managing their business, through the P&L and the balance sheet. And then obviously we also look at the conditions. So conditions are more kind of the economic, the industry, your skill set. So if I'm looking here, we have 5 different type of business. Some business might be a lower risk to borrow money, like they are more lendable than some other type of business because of the risk involved. Do we have any question before I move forward? We good?
None yet. Yep.
Okay. One of the things, when you think about building business credit, the reason why it's very important because at some point in the life stage of your business, you're going to seek to get business line of credit. You're going to seek to get term loan. You're going to seek to get a letter of credit. A letter of credit, it could be a project that you're bidding on, and then the company is going to ask from your bank to provide a letter of credit that say like, hey, they have a good business relationship with the bank. They are solvable. The money is there. They will definitely be able to take this project and conduct it from A to Z. The other thing too, think about your business, thinking right here, we do have a contractor that is on the call. As a contractor, there's a lot of tools that you need to have for the job. So you might be in the need of equipment line of credit to be able to perform some of your jobs. And, also when it comes to being a business owner, some of you, depending on the type of business that you have, might be working remotely, might be working from a collab place where you go and just rent a small office. Some of you might be renting an office space like of 7,000 square foot, and that's a huge payment. And then you're going to realize at some point to be like, look, I'm tired of paying $6,000 a month in rental, and I would love to have my own facility where I can hold my business there and actually, collateralize on the real estate, which is going to be an investment into the business. So these are the type of loan that when you're going to think about building business credit, at some point you're going to need, and that's why having business credit will allow you to be approved. Then there's 9 factors to build. We kind of going into the meat of like what are the factors actually the bank's going to look to and what you're going to need actually to use to build business credit. The first one, very briefly, most of you are probably already in business because you already have a business name, so you already have an EIN number established. What I could say, if you are a sole proprietor, I will definitely encourage you to get an EIN number. And why is so? Because don't forget, when you do business with clients, they could ask you to provide you for your tax identification number. You don't want to have to share your personal social security number. The other thing too is when you think about building business credit, you also want to be very mindful about the type of business entity you're going to be setting up. So right now, if you've been in business for many years, I'm pretty sure you have a pretty well knowledge that you are set up with the right entity. But if you are at the beginning of your business and you're looking to grow, It will be very important to know, if you're into the right business entity. For that say, I will not recommend that you ask, your banker or your bank in what type of business entity you should be getting set up or moving forward. It will be very important that if you don't have a CPA right now, that maybe you connect with a CPA that's having experience in your industry, so that way they can help you to make sure when it comes to tax that you are set up for success. Too often, CPA will make sure that business take a loss in the business, so that way they avoid paying taxes. I want you to be very, very mindful. If your CPA that you're currently doing business with right now is recommending to do that, you are not doing business with the right CPA, because this will impact your future. When we think about building business credit, you come to your bank and the bank is asking you for financial, and we take your balance sheet, your P&L, and we look at your tax return, and all we see it's a negative income. The bank's not going to be able to do anything for you, because it's going to look your capacity, all of the 5C. The bank's going to say, wow, this company is not solid. We're not going to be able to back them up. So very, very important. You make money. We all know that. You got to pay taxes. So please make sure you connect with the right CPA to report at least positive income, because otherwise it will impact you in the long run when it comes to business credit and business lending. And again, it goes end to end with the structure with IRS. You want to make sure that your business is well structured, because it could also, impact your tax liability. Do we have any questions for Nancy? Everyone is following?
Yeah, we had a couple in the past two categories. So we were talking about making the choice of the business entity. Would that change over time? Would you perhaps start like a sole proprietor and then maybe become a LLC or over time?
Yeah, absolutely. That's a very good question. And that's why I say it's very important to have the right CPA, because a lot of business start as a sole proprietor. A lot of business start as a corporation. And then as the business grow for liability purposes, for tax reporting, or guarantorship, then the business might have to move from a sole proprietor to a LLC, a C Corp to a S Corp, because there's all bunch of tax implications. So if you've been in business for quite some years, you do not have a CPA, I would certainly encourage you to connect with the CPA that are specialized into your line of business. And if you're already with a CPA and you've been doing business with them for years, especially we just came out of tax return right now, just ask the question. They will let you know if your business entity is the right one.
Thank you. So what I'm going to do, when we send out the recording, I'll send a link to our directory of accredited business CPA, so that if anyone is on the search for one, they can look in our directory. And then another question was two parts. What's the difference between a line of credit and a letter of credit?
Yes, very good question. Very, very good question. So the line of credit, when you apply, it's kind of like a personal line of credit, but it's a business line of credit. So like a credit card. So pretty much you come to your bank and, you don't want to do a term loan. You want to have a line of credit for cash flow purposes. So if you think about like your business is getting accounts receivable 30, 60 days, but you need this money to keep continuing operating. So a business line of credit will be the good vehicle of lending for you, because what's going to happen, the bank, if you're eligible, will give you $20,000. If you don't use it, it doesn't cost you anything. But as you are kind of doing your day-to-day operation with your business, and all of a sudden your accounts receivable or your client are not paying you yet, and you got to wait, and you're like, oh my goodness, now I cannot buy my material and to keep going with my production, then you're going to go and use the business line of credit. And then you're going to repay back the bank, kind of like a credit card, and then you're going to have access to it again. The letter of credit is actually, as a business, I'm going to give you an example as a contractor. A lot of contractors do a lot of bidding. So there's like big job out there, like through the states, and then the contractor is looking to get that job. But the state want to make sure that the contractor has the financial resource to be able to conduct that project from point A to point Z. So they're going to reach out to the bank and ask the bank to provide them a letter of credit. That letter of credit is going to explain to that company that, yes, that business is solid, that business has line of credit with us, they always make the payments, they've never been delinquent, that business has good deposit, substantial deposit constantly going into the bank, the account is never overdrafting. So that makes a deal more attractive to these companies to do business with you. And that's called a letter of credit.
Okay, thank you. And the second part of the question you answered, because it was, does a line of credit cost you anything? So it doesn't if you don't use it.
That is correct. So exactly, and just be mindful. So from bank to bank, it kind of differs. And but with my experience, most of the time when you apply for business line of credit, there's like an upfront fee, and it varies from bank to bank. Some bank, I'm going to give you an example, like Berkshire Bank, it's $250. You pay that one time, and we don't ask you for anything else after that. The only thing you're going to be paying is interest. So if you happen to use the line of credit, you're going to be accruing daily interest on the line of credit, and that's what you're going to be repaying. So from bank to bank, it could have some variance, but most of the time there's a lot of similarity.
Okay, thank you. That's all for now.
Good. So we did talk about, so when we're talking about credit, so you guys already been in business, and I'm hoping that you did apply for a DUNS number. If you don't know what a DUNS number is, it's actually a company that will kind of start building your financial credit. So it is very, very, very important. If you have not registered with DUNS, you see my screen right here, and you're going to have access after that if you want. You go to this website. It doesn't cost you anything, but you want to make sure that you do have a DUNS number, because all the lender and most of the lender, 99%, will go under the DUNS, and it will help us to see, determine the reliability of the financial stability of the company, because everything's going to report to DUNS. I'm just going to pause and see just to see if anybody has any question. It's very simple. It doesn't cost anything. You visit the website, and that's how you're going to start establishing credit. Because DUNS going to collect all the the business financials through their website.
Okay.
No question?
I don't have any questions, but I did follow that link, and it is done in Bradstreet, which might be a more familiar name to some people, but that's what we're dealing with here. So.
Perfect. Yeah, we go by DUNS, but I'm glad you had that comment. So the other thing, when we think about building credit, whatever you are in new business or whatever you've been in business, and again, you haven't seek for credit, the faster way, the easiest way to build credit, it's actually open a business credit card. If you do have good personal credit, because you're going to put your personal information during the application, you are more likely to get approved for a business credit card. But I want you to be very careful. Do not go online today and just start shopping for, applying left and right for business credit card. Be very mindful. Do your due diligence, do your research. I cannot recommend during this call what type of company you should seek to apply with. You could always reach out to me. I'll be more than happy to give you advice, and it will be outside of Berkshire Bank as well. And again, please refrain from going and apply with different companies. You want to make sure you apply with the right business credit card company, which could be a bank, which could be totally a business credit card company solo. But there is company out there that are the right business credit card that you want to get. If your personal credit is not where it needs to be at, you could also think about doing a secure business credit card. So pretty much most of the business or most of the banks that do have business credit cards will ask you to put a small down payment of about $300. Usually they're looking for around $300, and that's all it takes to kind of start that business credit card, because we're going to have a collateral, which is the $300 to secure in the instance of non-repayment. And then you want to be mindful, the rule of the 30% does apply on the business side as it does on the personal side. And I'm pretty sure you all heard of that you should never keep more than 30% of your limit on your balance. So if your business credit card limit is going to be approved for $1,000, and this is very, very, very important. At the beginning, even if you're going to be paying your credit card in full, I suggest and I recommend that you do not use more. If your limit is $1,000, that you do not use more than 30% of your limit, and then you make your payment. If you do more than that, your score is going to go up, but it's not going to go up as rapidly if you were to keep that 30% credit utilization. Any question before I move to the next slide?
No questions.
We're good? Okay. And I'm just keeping track of time. So the other thing also that I want you to be very, very mindful, you're going to hurt if you go online. If you go online, you could literally get most likely any sort of business lending available to you. You have to be very, very careful, because these lenders don't report to your credit. There's a lot of like third-party lenders outside of banks or well-known business lender that will say, oh, yeah, we're going to give you $10,000 with a very high rate, with a fee involved, and they will never report to your business credit. And then you're doing all of this thinking you're doing the right thing. And then as you look at your business credit, you're like, where's this company at? A lot of lenders, even on the personal side, do not report to business or even personal credit. So be very mindful when you decide to seek to either build credit, or if you already have credit, looking to get a loan through some of these lenders online. Again, we go back to the lender. Before you apply for a loan, make sure they are reporting. Make sure that are they a predatory lender, so they have a lot of hiding fees. They might be showing you this very attractive loan, and you need it, you're in a bind, and you can keep moving, with your productivity at your business because you need that money. But then it could harm your business because this is not the right lender. Make sure that you always connect with your bank. Make sure you have a relationship with your bank. Make sure you really know who you partner with, and make sure how much do you know of the business partner or the lender partner that you're going to be doing lending with. That's very, very important. I don't say it enough. Please do your due diligence. Always connect with your bank first. If your bank is well-resourced, usually we know what we can and cannot do. And if that is something like, let's say you apply for a term loan, usually your banker should be able to ask you upfront all of the information, and without having to pull your credit or submit an application, they should be able to let you know if they will be able to assist you or not. One thing I'm going to say, if your bank say, well, let me submit an application and we'll see, walk away, because most qualified banker or lender will know by you providing financial if they're going to be able to help you most of the time. So if they are rushing you to get into an application, go to another bank, seek for help, because bank and cash flow if deal's going to work or not. Any questions?
No, I just wanted to comment here that we have seen quite a few scams in this area too, where, are looking for the red flags if things seem too good to be true. We've seen businesses pay a high fee for a loan as well as individuals, and then they just lose that fee and don't get the loan, and they're in worse, situation than they started. So I agree totally with Sonia on doing your due diligence, do the research, and if you need some help, you can contact your Better Business Bureau and we'll help with that as well.
Thank you, Nancy. And the same thing too, as a kind of presenter today, I know I work for Berkshire Bank, but I am very involved in the community. You don't have to bank with me for me to actually give you some advice. So please reach out to the Better Business Bureau, reach out to me. I am more than happy to provide you information. One thing that, we talk about your loans, we talk about a business credit card. You use your credit card and you have, a 27, 28 cycle day of repayment. A lot of business will wait until the due date to make their payment. I will suggest that, first of all, you make your payment on time, because if you don't, you're trying to build all of that business credit, and now you're messing it up by not making your payment on time. But one thing I will also recommend is if you are able to pay the account earlier than the due date, it will impact your credit score in a positive way. So if you don't, because there's a cash flow issue, obviously make your payment on time, because this is still going to be very good, but early payment is also better. So I tell people, stay within the 30% of your limit. So if your limit is 1,000, never at the beginning. I want to make sure that I'm clear here. At the beginning of building your business credit, if your limit is $1,000, do not spend more than $300 on that card. Make your payment on time, and if you are capable, as you spend as you go online and make your payment as an early payment. That will report on your credit history and your credit utilization, and that will definitely boost your score more rapidly than just waiting at the end of the month to make your payment. Any questions?
No questions.
Okay. The other thing too, if you have suppliers, reach out to them. Suppliers can help you actually build credit, because the supplier actually report to Duns and Bradstreet. So if the supplier can give you a trade line, take advantage of that. If they give you a 30 days payable, sometimes there's a little fee involved, or the cost could be a little bit higher, but that could help you get you to your project. And not only that, they will report to the credit as you making the payment on time. So this is another opportunity for you to boost your credit and have reporting history through your supplier. One thing I'm going to say is, if you go back, I did talk about the CPA. I did talk about making sure that your CPA does not encourage you to take a loss in your business. If your business is actually profitable, report a profit, pay the tax on it. And if you owe money to the IRS, okay, you have to be very, very mindful. Make sure if you don't have the money to pay IRS that you do make payment arrangement and you are respecting these payment arrangements. Because as soon as IRS report to your credit report. No bank, I'll say banking, I'm not going to say no lender, no business lender, but no bank will give you any business lending when there's a lien against your credit report, liens against your property. So you want to make sure, like right now, we all completed a tax, or you're about to, if you have a tax extension, make sure that if you do owe money to IRS, and if you're able to make your payment in full, fantastic. You don't have to worry about, any reporting. But if you're going to need to make a payment arrangement with the IRS, please do not be late and respect these payments. Otherwise, it will impact you with your business credit. Like the personal side, there's 3 credit bureaus that lender use on the business side, and they are Duns and Bradstreet, they are Experian, and they are Equifax. So I will certainly encourage you, if you are right now on the personal side of things, monitoring your 3 credit bureau, I will forcefully encourage you to do the same thing when it comes to the business. You want to be aware of what's reporting on your business credit, because as you think kind of like the personal things are going well, and you're like, look, I have good income on the business side, my balance sheet, my P&L, all of my numbers look great. I'm going to see my lender because I need this equipment. You go to your lender, you present all of that. We're like, yeah, absolutely. We're going to be able to help you. And then all of a sudden we are pulling your credit, and we are noticing that there's been delinquency, there's been some reporting, negative reporting, and we like, could you explain what are these reporting? And to your knowledge, you are not aware of it and it does not belong to you. Then you got to go into the process of disputing that, having this removed from your credit, and then the banks got to wait before they redeem you with a decision. So today, if you do not have any business credit established, I'm giving you the tool what to do to build credit. But if you do have business credit already established, and you are not monitoring your business credit, I will certainly encourage you to sign up, and it shouldn't be at no cost to you. These websites are at no cost to you to actually look at your credit score and your credit report. One thing, and I'm going to briefly go over this, these are usually for startup business, but they are also for established business 2 and more years. So when you're looking to do a business loan with a bank, if you are very limited on business credit, the bank might require to go the SBA way. And you're like, what is SBA, Sonia? Well, SBA is the Small Business Administration that will back up a portion of the loan with the bank. So which means it makes the deal more secure and more attractive for the bank to go in and approve it. A lot of time as a startup business, if you're looking to get a business line of credit, a business loan, if you are being in business within 2 years, most likely we're going to request to have it backed up by the SBA. If you've been in business for quite some years, there's also a possibility that we will ask the SBA to back up the deal because the deal is not strong enough for the bank to go by themselves. Any questions?
No questions.
No question. Let me see. So when we talk about, business lenders, so again, and I mentioned it earlier during the presentation, make sure when you seek credit, you seek for business term loan, you seek for business line of credit, or even a business credit card, that you know who your lender is, that you know if your bank is on the preferred list when it comes to SBA, because you want to partner with a bank that are expert, because SBA it's a beast itself when it comes to lending. There's a lot of information involved. There's a lot of paperwork involved, and you want to make sure that your bank is well knowledgeable to help you, and then just don't hand you like a stack of paperwork and say, go fill this out and come back when it's done, and then we're going to review it. You really want to partner with your bank end to end during this process. Any questions?
Nope, no questions.
No? Okay, good. One thing, when you are seeking to establish or build credit, there's certain entity, business type that are not lendable when it comes to some certain lender. Like banks, a lot of times, like for insurance company, passive business, legal gambling, private club, government entity, bankruptcy discharge business, nonprofit. So some of these business might not be lendable through conventional lending when it comes to a bank. Again, if your business is part of any of these ineligible business types, don't walk away. Always connect with your bank, because credit union banks sometimes have different lending guidelines, and you want to make sure you check with them first before you go online and then you self-source like a third-party lender that could actually harm you. One of the things, very important when we think about building credit, I reviewed the business credit card. That's the easiest way about building credit, establishing credit. But if you are like right now yourself as your business in need of like a term loan because you need to buy a piece of equipment, you need a business line of credit because, it's going to help you with your cash flow. Just be prepared when you're going to go meet with your banker. These are the list of things that most likely lender and bank will be asking you. Here it says startup expense, that's for startup business, but established business, the capital equipment, your balance sheet, your personal financial statement, your personal resume. We're going to ask you for your P&L. If you're a startup business, we're going to ask for your projection in revenue, your projection in expense, because we want to see, if you are solvable as far as like, are we going to be able to lend you money? And this is it, so it's very simple. When you look to build credit, the easiest way, the fastest way is to look to do a business credit card. Always connect with your bank first. Don't go and surf online and go and apply left and right. If you're looking more than doing a business credit card, definitely connect with your bank, connect with your banker because they are a very resourceful person to help you. I will also encourage you that you set up accounts with Experian, Equifax, and Dun & Bradstreet. So you start monitoring your business credit. And again, try not to spend more than 30% of your credit line when you get the business credit card.
Right. I do have a couple of questions here for you, Sonia. Thank you so much. Yeah. Having to do with business credit cards. Do business credit cards have the same kind of perks that the individual consumer cards have?
Absolutely. Same thing. They work the same way. Obviously, you just got to keep in mind if you're going to apply for a business credit card with either cashback rewards, points, traveling points, just keep in mind that if you do not plan on paying in full your balance every single month, usually these cards, the interest rate are higher because they give you perks. So if you need a business credit card at some point in your business and there's a possibility you might keep a balance on it, then seek for a card that has no annual fee, that has no perk, because you're always going to have the lowest interest rate. And definitely seek for a business credit card that has no annual fee. I know like American Express do charge an annual fee of $200. They are most likely more difficult to get the card as a startup business or establishing credit, and then they charge you also an annual fee. So I will encourage you to stay away from that and really looking for a card that doesn't have any annual fee.
All right. And there's a question about, we talked about not letting your separating your personal credit and the business credit. That's very important. But if things go bad on the business, and you end up with a bad credit score, will it affect your personal credit score?
No, that's a very, very good question. And I think I might have went over this very briefly. So this is why it's very, very important to know about your lender, because too often small bank, credit union, you're going to go and apply for business credit, and they also report on the personal side of things. So it is very, very important when you are ready to apply with whatever financial institution that you do business with, ask them if they only report to the business credit, or as a guarantor, they will also report to your personal credit. That's a very, very good question, because if they report to both sides, walk away, because you don't want your business credit to interfere with your personal credit.
Right. Okay, thank you. Any other questions? Wow. It's not your last chance, because Sonia's contact information is included here, and it will be included in the email that I send out with the recording. So if you have other questions that come to mind, which is normal, afterwards, oh, I wish I asked that question. You can get to her directly with those questions, and she welcomes them. So
absolutely. Please take my cell phone number down, text me, let me know that you won the call today, and ask your question. I mean, that's what we are here today, to educate you, and I'll be more than happy to help you whatever question and capacity that I can do.
All right. Well, thank you so much for all this information today. It was really eye-opening in some cases, and just like consumers, when you're dealing with your credit, you're dealing with loans and these things, you really need to do your research up front, or you could make some mistakes that could negatively impact your business. So we want to make sure you have all the information you need, and you ask all the questions you need to before moving forward. So thanks for everyone, especially Sonia, for attending today, and we'll follow up with an email that includes the recording, the PowerPoint presentation, and as I said, there might be some other little bits of information there, a link to accredited CPAs, because that seems to be really important, that you have a CPA that you can really trust, and that will go out to you before the end of the day. We have no more webinars scheduled this month. Later in June, we have one that's an attorney. And so follow us, and we'll let you know the topic. It has to do with employment law. And I'm sure that will be very interesting. So thanks again. And we'll see you next time. Goodbye for now.
Thank you, Nancy. And good luck, everyone. Have a great day. Thank you for joining us today.